Hello! Today I'm going to be showing you how to create an income statement. The question says, on March 1st, Clara organized Schumann Consulting Company and contributed $106,000 of assets in exchange for common stock to launch the business. The accounting records show the following amounts as of March 31st, and here are the amounts on the left. Use the given information to create an income statement, a statement of retained earnings, and a balance sheet for Schumann Consulting Company for the month of March. And this video is just going to focus on the income statement. So first let's just talk about what an income statement is. So the income statement adds up all revenues and subtracts all expenses to determine how much money a company made in a given time period. And the final result is called the net income. So in a minute here, we're going to try to find all the revenues from our list, try to find all the expenses, take the revenues and subtract the expenses, and we'll find the net income, how much money this company made in a given time period. In this case, for the month of March. Alright, so now we can head over to our actual statement. And every financial statement is going to have a three-part header. The first part is always going to be the name of the company. So in this case, that is Schumann Consulting. The second line is going to be the name of the statement. So in this case, the income statement. And the third line is going to be the date or date range. In this case, date range for the month of March. So we will say for the month ended March 31st. So the first section is going to be for revenues. And for revenues, you want to think of things that the company has earned. So oftentimes the revenue accounts are going to end in the word revenue, and other times they'll end in the word earned, such as fees earned. And in this case, the only revenue that I'm seeing is service revenue. So we can highlight that, and we can type service revenue, and that's for $29,000. Alright, next we can move on to our expenses. So expenses are oftentimes going to end in the word expense. So I've got rent expense here, and I have salaries expense here. So we can copy those down. Salaries expense $12,000 and rent expense $7,000. Now just a note to avoid confusion for the future. Usually the accounts that end in revenue are going to be revenue accounts. There is an exception to this, which is unearned revenue, which happens to actually be a liability. Now for the case of expenses, there is also an exception. The account called prepaid expense is actually going to be an asset account, so don't include that in the expense section of the income statement. Alright, now that we have our expenses here, we can total those up. Total expenses, and that's going to be $12,000 plus $7,000 is $19,000. Alright, and just a little note about formatting here. You'll notice that we have the revenue, service revenue, in the right-hand column here. That's because this is kind of functioning as our total revenue. If you had multiple revenues, you could have a line for total revenue, but since we only have one, it's our total revenue, it's going to go in the right-hand column. Whereas for the expenses, we have multiple expenses, and the total of those can go in the right-hand column, whereas the intermediate values, the individual expenses, can go in the left-hand column. Alright, finally we have our net income, which is the revenues minus the expenses, so $29,000 minus $19,000, and that's going to be $10,000. So in conclusion here, for the month of March, Schumann Consulting Company made $10,000 in net income.